how do you access, right? The access point. And I think what we've been able to do over the years is really create that access point. And, and with that has been sort of the cornerstone to a lot of our overall success, especially when considering, our international presence and what that.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henschel. Hello everyone, welcome back to The Path to Wealth. I'm your host, Hannes Henschel. In this episode, we will learn the fundamentals of financing commercial real estate deals and projects. We will sit with Yair Tilson, the founder and CEO of Kai Finance. Before that, Yair started his career as a loan originator at Greystone, the number one ranked Federal Housing Administration, multifamily and healthcare financial lender in the country. He first ventured into the real estate industry as an on-site manager for the Ramot Group, one of Israel's largest property management companies. After 10 years of managing Kai Finance, the company now has 3 offices in the New York, Tel Aviv, and South Africa. As CEO, Yair works with high-profile sponsors across the United States and has successfully transacted over $2.5 billion in debt equity placement, including senior loans, mezzanine, preferred equity. Welcome to the show, Yair, and it's already been an interesting conversation before we went live, so I'm definitely looking onwards to what's coming out of this conversation.
Absolutely. Thank you so much for having me, Hannes.
So let's start with why real estate and why debt. How did you originally get into this, and why are you so passionate about it?
Absolutely. Yeah. And sometimes people might find it obscure to be so passionate about debt and structured finance, but it's just my jazz. But I think where it comes from, Hannes, is that I had the privilege of coming from a multi-generational family. My grandfather was building single family homes back in the 70s, 80s in upstate New Jersey. My father had dabbled in and out of real estate over his career, and in the last sort of decade plus has really focused more on the institutional side of the real estate game, and looking at some of his own property, and then on to myself and what I do here with the structured finance space. That was something that I think through education, exposure, and then just a little bit of luck and good timing is where I found myself. I think where I like so much about structured finance is the ability to really create someone's vision into reality. So, what we get the privilege every day is working with high quality sponsors all across the United States in their various different strategy types, asset types, et cetera, and really basically understand their dream, what they want to accomplish on any given transaction. And then for us, we have the unbelievable delight in, if successful, really transforming that dream into reality by structuring the correct debt and equity that ultimately gets them to the point and finish line for them to transact. So I think, it's been a long progression to get to the place that we can bring things full circle like that on any one given deal. But I think the journey very much I enjoyed as well, through that process.
I think that's the most attractive way I've ever heard anybody speak about debt structuring.
Yeah, you can make anything sexy. You just have to be familiar enough with it. Yeah,
definitely. So, what put you mentioned timing, luck. What put you in the position to take advantage of this and really build a significant company for yourself that now operates on 3 continents?
Yeah, so I think, without being too long in my answer, I think it was kind of twofold. I think some of it, and I know on your podcast here and your listeners, you like to understand sort of not only the business itself, but sort of the outside components of what makes a successful business, et cetera. And I think, there is no short, or I should say rather, there is no substitute for a good connection, and I think a lot of my start came through that, and I'm proud to say it, and I hope to pay it forward to other folks in my circles and extended circles, et cetera, over time. And I think being well positioned, that being communities I grew up in, things that I was around, being very interested in those things, led me to a position that when looking, kind of coming out of college and deciding kind of what I wanted to do, I was already exposed a lot in the real estate space. It was something that became very familiar to me, And then debt specifically, having a very close relationship with folks at Greystone, et cetera, allowed me to have sort of the foot in the door and then be able to then take it from there, if you will. As far as the company itself and the DNA is very much mine in the company over time, a lot of the international presence came from both the personal and then just good timing where the market was when I was exposed to it and kind of doubling down on those efforts. So the personal, and I'm a very happy and thankful married man of two beautiful little girls and one on the way. So and that all came from thank you very much, and that all comes from a product of Israel. So actually today I'm sitting in my office in Israel. My wife is originally from here, and today we grow up our kids here in this local neighborhood that my office is located in the suburb of Tel Aviv. And as well as we've maintained our office in Midtown Manhattan for the last 8+ years now. And the South African office was an extension of what I'm about to explain, which was the general approach of our company that has evolved over time. And what that is that there's been this ever growing appetite for international capital looking for safe haven in the United States, whether on a small scale, being high net worth individuals, up to a much massive scale of institutional capital, and in all different capacities, development, acquisitions, long-term type money, short-term money. I don't know how much you want to go into that in this podcast, but, we can talk about it in a different conversation. But ultimately, whatever levels of capital, they have this appetite for the U.S. But just like in all things, you need the gatekeeper, if you will, right? How do you access, right? The access point. And I think what we've been able to do over the years is really create that access point. And with that has been sort of the cornerstone to a lot of our overall success, especially when considering, our international presence and what that international presence is. And in fear of talking too much about myself in this conversation, we essentially have the privilege of representing both sponsor types. These are companies who are their own GP operators, want to grow out their own platforms in the U.S. And what they need is the right U.S. counterpart to help them open up the correct doors, in some cases as much as legal teams, entities, things of that nature, up to, of course, what we do best, which is the financing of things and growing out their ability. Some of our greatest success stories are guys we've grown from just a couple $1 million portfolio to $1 billion plus portfolios and examples as such. And, for foreign national groups to have that ability and advantage to have that type of resource, and also at the same time it's all nearby, has become one of our sort of unique, very unique qualities. So that, with fear of going too much into it, I think I hope that answered some of your question.
Yeah. So what is so attractive for overseas investors that we have naturally in the United States? Why is there so much appetite for international investors in bringing their money overseas? Yeah,
so I think that it's so funny because I was on the phone with a client yesterday just talking about this exact topic. I think it ends up ultimately being twofold. On the first end, fundamentally, most first world countries, if you will, or even all, most countries that have international trade, et cetera, are going to always want to diversify outside of their own country. So there's a natural inclination to invest out. I think, Hannes, you come from Germany originally. They're one of the more famous, international investors of all countries, one of the most, decorated as far as ownership across the globe. It's always an inherent appetite for a country to invest out. Then the question becomes, what are my options? And then it becomes, down to different sectors, et cetera. And then real estate will be sort of fall under one of those sectors. So I think for a lot, at least the countries that we work with in that capacity, it comes down to, okay, is it the US versus is it Europe? Is it Latin America? Is it so on and so forth? So they're already in the decision-making process of kind of choosing a country, if you will, So, and then once you start to dig down into it, what do you want? You want something stable. So there's only, as thank God we do live in an overall stable world, right? When you really get into the nitty gritty, just like any good real estate deal, right? There's only so many, if you really look into the detail and the history of it, where you can really count on that stability all the way through. You have that sort of historical data, what America is amazing at, especially in the multifamily space and some of the other really well sort of documented spaces, if you will, or easy to, sort of get information on, it's matched one to none. The ability to go on CoStar and underwrite a deal and kind of see all of that in its entirety. And those are minimal resources where institutionals have that much more is a massive advantage over other countries that have much less available data and security in that respect. And I think the mixture of those things, and then without going too much on a patriotic speech right now, I think that with so much else, that America has to offer, and it's pretty a funny question in a time like this, because I think across the world, countries, citizens of countries have been, and with a lot of fear getting too political in a conversation like this, no place for that here. But I do think there is a version of what's going on in America today that we never fully appreciate how tremendous and successful and unbelievable, and how many resources the country really has, compared to other places around the world, compared to even any other, in my opinion, any other empire, that ever existed. So I think from that respect, when you really get into it, and you're deciding between one country and another, I think it ends up being a pretty easy decision. That being said, I will tell you, and this is where the personal life of people always comes into business, and we were just talking about it before jumping on this together, is that, funny enough, let's say, for example, out of Israel, one of the reasons why they hesitate, or why they're always more inclined to want to look into Europe when possible, is because of travel time. Right. So they're just people at the end of the day. Right. So between the hour difference of communicating as well as the actual physical travel, it's more bearing. So if you can find an equivalent, opportunity that they can justify, they will always go to the closer. So these little nuances are pretty funny, and even on this kind of more sophisticated business.
Yeah. And sometimes it's also just cultural, it's where can
Totally,
you relate
for sure.
more.
Absolutely. I think that's a huge component. I'll tell you a very funny story about that. So I have a particular clients out of a particular country. I'm not going to say which, but they have a particular way of attitude, and extremely wealthy and well-to-do people, their entire approach is to be self-deprecating, right? So their whole thing is to be like, oh, I'm the dumbest in the room, when really, of course, they're the smartest, right? They're the most successful in the room. But that's just how they talk. That's the way they communicate. So in America, as I'm sure you're very familiar with, it's very much the opposite, right? You really want to puff your chest, right? You want to be able to really show right? Everyone is sort of competing in that way. So when we do some of these what we call road shows, et cetera, with clients, this was a particular road show that we were taking the client for a potential credit facility. We'll get into it on this call. One of the main loan products that we deal with on an institutional scale, and we talked about it. And I said, I'm just giving you a heads up. When we get into these meetings, you can't do that. You got to come into the room, and you got to be the big boss. So he appreciated what I told him. And to this day, we make a joke about it. And now when we go to meetings, he says, well, Yair told me I got to tell everyone that I'm really smart. So it's pretty funny. So, everyone, but it's cultural, 100%, and that I think is one of our skill sets, and what not only clients expect from us, but what ultimately allows us to be successful is a lot of that communication, 100%, 100%.
But it's so interesting. I don't want to spend too much time on it, but originally, even when I came to the States, I had a lot of adjustment to do. And I thought that, given that we're all Western, that there is a certain closeness, but I had so much to learn, and it kind of also see the nuances in how people behave. And just like you said, they are so confident, and when you come from a culture that's just a lot more
reserved, let's say.
Reserved,
right, or poised, right.
And then you're like, oh my God, like everybody is like,
yeah.
And then eventually,
and you're also not reading the other side well. So just because they're coming off confident doesn't mean they are confident, and then you're misreading the situation. So it's the devils are in the details, let's say. It really is in many ways.
Yeah. So let me ask you a question about your new office in South Africa. Is that mainly expat-driven, people that settle there? And I'm thinking about, like, in my family, even myself, I have I think spends close to 4 or 6 months of the year in South Africa because he hates the European winter, and
Yeah,
he
yeah, yeah.
loves the coast down there, and he loves the vineyards, and so he's just like, yeah, it's perfect. I'm still in a similar time zone, I can still operate,
Exactly.
but the weather is so much better. So I was wondering if the office you are having is locally driven or driven by maybe people like my uncle.
Yeah, so it's interesting. So South Africa being really the newest of the office, only launched at the beginning of last year. What we do here is because we're very much like a legacy type company. We've never built on a point of like we have to scale everything sort of opportune, etc. We choose the deals we work on, kind of environment. South Africa came out of 4 or 5 years of a lot of, thank God, success coming out of that. Now, what defines our success at South Africa is similar to what I was saying earlier. And we'll answer your question, which is the success we're having out of there is twofold. Either there's LP capital, call it private equity, family office, institutional capital, looking for local partners in the U.S. to JV with on opportunities, and in that capacity, that's kind of a complete local effort, right? So the only way you can access that type of capital and relationships is through a lot of hard work and time and patience, and working with the local, call it squad over there to kind of drum up that ability, interest, and infiltration. On the other side of the coin is kind of more similar to expats and a mixture of also locals or already existing real estate professionals in their space. Maybe they're already much more decorated and invested, in different countries and different areas around the world, but they haven't yet necessarily penetrated the U.S. or have in some other capacity, and are now looking to build out full-on platforms, GP sponsor groups, in the U.S. And those are a mixture of expats and all sorts of folks who happen to be based in South Africa, but investing, stateside. So when it came to our office, it's all really locally driven. It was built already off of a local relationship. That this is a great kind of, pivot to the story as well, Hannes. I think, and I love this, and this is one of the reasons why I agreed to come on to the podcast. I love where, to say, I always say this when I'm interviewing new people for my company. What we do here is not a job, it's a lifestyle, right? So there is no separation truly. I mean, there has to be a healthy separation in thought when you're with your family or things like that. You put the phone away, but there's no separation between you as your person outside the office as opposed to inside the office, right? In the business that I'm in, everybody you meet, anybody is, first of all, your representation of the platform at all times. And two, thankfully, the platform allows for, you to collaborate on almost all levels, with folks. So there's no reason why that shouldn't be, up your sleeve in a conversation, et cetera. And that's very much the guys who succeed with me are the guys who really embody that, and I understood that very early on in my career and how to sort of approach the business from that perspective. So, I forget now. I lost my train of thought. Where did we start on? Where did we start there? Because I was telling you.
Well, we're talking about South Africa and how that developed, and I was
correct.
inquiring.
Thank you.
Yeah.
There you are, the guiding light, Hans. So to bring it back, so when it came to, in this particular case, his name is Ricky Jack, who runs my South African outfit there. That was just through originally a nice referral from a expat friend who lived in South Africa, who told me about this amazing guy, Ricky, who at the time was working for a private equity firm, investing in U.S. commercial real estate. I said, holy cow, they do that out there? Unbelievable. This is probably back in 2016 or sometime around then. From there, me and Ricky got to know each other. He at the time was simply just doing, not simply, but doing acquisitions for this company, and kind of was deciding his next move. And from there, without going way into a long, long history in detail, 5, 6 years later, now he runs the office. This went from a referral and a deal or two to, a full-on partnership and relationship long-term. So, you never know where things come from and how they develop. And I think that's life and how life works and how life works with business, so it's just an interesting side note there.
I can't agree more. And I think Steve Jobs said it at the commencement speech, you cannot connect the dots previously. It's like you just have to go through life and then you can look back and wow.
Right. Hindsight is 2020, right? Hindsight is 2020.
Yeah.
It's so funny. So that in life, I find that, you have there's all these phrases when you're a kid. You learn these phrases, like hindsight is 2020, or whatever they could. And of course, I can't think of any now, but we use them all day long. And then as you get older, I think you start to understand. Wow, those lines make so much sense. There's real truth, and I think that's why those truths stay. They're not just they're not just phrases you hear as a kid. They really have a lot of meaning to them. Over time. I think that's why they stay. They stay
I think
relevant.
the same is true when you look at books there's books that are thousands of years old. There's some, there's different religious texts. And some of that stuff just hasn't changed. Like the human condition hasn't
Right.
shifted.
That's absolutely right. I think that's in a world that it's so hard to find truth. I think that is truth, right? Truth are things that last, generally speaking, because then they're undeniable, So I think I think that's perfectly said.
Yeah, that's exactly it. And truth, I guess, especially these days, the word has an interesting connotation. But it's like,
Yeah, almost a trigger word. It's almost a trigger word, right? Which is pretty hilarious because it's really a very positive word. It's nothing triggering about the truth. The truth is 1+1. It used to be, but now things have become a little bit more confusing. And you see it whether it's in business or whether it's in personal, and that's the new reality. So you have to kind of live in this reality where you're spending half your day kind of solidifying truths, and the other half then working off of those truths, right? So it's a
but it's,
pretty, yeah.
see, it's also, okay, so you actually help people bring capital to the United States to invest in commercial real estate, which also makes me think, it's like, okay, what are the fundamentals or the truth of this market? It's like, okay, we've seen capital flowing in from many different places, and there's some of my folks in the real estate space. We're actively bringing capital from Europe. We're bringing capital from
Sure.
Australia. You're bringing in capital, from Israel and South Africa, which makes me wonder, how does that heat up the market? How does that
Oh,
change the dynamics if the
absolutely.
entire world seeks alpha in the same real estate market?
No, absolutely. The I think it's a great question, and I think anyone who's touching those flows of money, it's obvious, right? So, and certainly, let's call it, if you ever, or maybe you have in the past, brought on some very successful investment sales brokers or people like that who really are sort of dictating the price of things and involved in that. I think absolutely, whether it's in the residential market where it's that much more apparent, like when you go to Beverly Hills, let's say, or places like that, or uptown Manhattan, Upper East Side, Midtown, what have you, in those, or Miami, certainly you really see the effects of how they push condo prices and things like that. These are dormant apartments a lot of times. People are often buying it just to park the money there as opposed to parking it wherever else it is. So I think absolutely that stuff drives the market. When it comes to more on the commercial side of things, I think it gets a little bit more in the minutia because it's an over $1 trillion marketplace plus, and even if you want to make a big splash with a couple 100 million or a couple billion, it's only going to move the market so much. That being said, it's still a fraction. That being said, I think on any given deal, absolutely. Once you have international capital involved, what we saw, I mean, the last 10 years, any bull run is going in America, let's say, is going to consist of a large influx of foreign capital. Absolutely. And I think this bull run arguably probably was the largest influx of foreign capital ever, probably, recorded, prior to this date, certainly, at least from my vantage point, I would think that's accurate. I would say if I had to dial it back to a very specific time, we personally were having a lot more success between, let's say, 2013 and 2017 with countries out in Asia and Southeast Asia. That became increasingly more difficult to deal with those money flows, to rely on those commitments, to even get feedback, so on and so forth, kind of dialing into 2018, 2019. And then it's sort of, ever since, and then COVID really put a major wrench in it. Ever since then, we have not even gone anywhere close to levels like we were at 2013 and even starting. In many ways, we're almost leaving that dormant temporarily just because it just felt so much resistance. So I think, if I had to dial it back in 2015, 2016, certain deals that we were working on with that type of money, I think they absolutely were. I mean, they were winning deals because they were bidding the most.
Yeah.
So I think they absolutely were driving up the market, and I think there's always going to be. I mean, Miami, not to single out any one market, but is famous for, tremendously being influenced by Latin American funds and driving prices up that way. So yes, I think it's very prevalent. Your question, and definitely happening.
This is interesting that this is being driven by South American funds, which also might be language in proximity. It's a lot easier for them to fly to Miami than to fly to New York or elsewhere.
100%. It's even funnier. I have now. What's happening is I know I was spending the weekend in Miami just a couple of weeks ago, and I was talking to a gentleman in the lobby. We're having a conversation. He's a successful businessman. He's originally from Venezuela. He moved to Miami, but does business in Mexico because it's just right because he'd rather live in Miami, but it's much more comfortable for him to do an hour, two and a half hour flight, whatever it is, into Mexico, do his business in his language and how he knows how to do business and come back. So it's very interesting. Exactly what you said.
He probably has a very interesting journey leaving Venezuela, building new business in Mexico, living in Miami.
Yeah, right. It's one way to live. Yeah.
Yeah,
I
but
think I
also,
think also I think also I'm sorry to interrupt. I think also there's a and this was going back to sort of my patriotic speech, but I think there is a misconception, and people use these words very flimsily. Dictatorships and these kind of extreme versions of states. And the reality is those do exist, and in those places it is a very daunting and scary environment. There are people, human nature is to get used to whatever you're in. So, there is a version of it that I think it's hard for people to understand how, and I'm not going to say any one country, but how some of these countries, there's millions of people who live there, and they do have banks, and they do have movie theaters even, and they have running water. They do have what looks like any normal country, but it's not operating that way at all. And to what we call normal, let's say in the United States, with real freedoms and ability to build businesses, and to know that your money in the bank really is safe, subject to what's been going on the last couple of weeks here in America. But but even in the way that it works, right? Even in the way that the country responded in such a in such the face of such significant potential disruption is a testament to the country. And I don't think people understand that many, if not most other countries, probably just statistically talking now, do not have anything near that. So I think that's something it's important to note. In that conversation.
yeah, it's important in general, I think, to have perspective and
That's
to,
exactly my point. Right.
in
Right.
terms of what's going on globally right now, as well as what has been going on historically. Like, nobody has ever had the kind of wealth and comfort we have.
That's exactly right. And just to bring it back to your original question, that's why I think when let's say from an American standpoint, or someone who has, I always found this statistic unbelievable, and I only knew it once I spent more time away from the U.S. But only, and I don't even know where the statistic is now, but I think the last time I heard it for fact was maybe a year or two ago. But at that time, only 30 or 35% of Americans were holders of passports, meaning that there's the overwhelming majority will never leave the country by definition, right? They're not even interested. They don't even have a passport. They're not even interested in necessarily leaving. So that is very different than most of the rest of the world, which is a testament to how amazing inherently the country is. There's no reason to leave, really, right? There's not this inherent like, oh, what is out there type of feeling that I think a lot of other countries, I wouldn't say suffer from, but is certainly in the culture of many other countries. So I think that's something very interesting, and why it may be hard. Like, why would this private equity firm, 15-hour flight away from our country, be curious in buying this apartment complex in Tallahassee? It's to the guy in Tallahassee, he's like, where are you even from? Like, why are you? You're an alien. Where are you coming from? But for them, that's an opportunity that could be worthwhile, because for them, they see opportunity differently. So it's interesting for sure.
I had a conversation with acquaintance, someone who structures coal deals, and it was amazing who buys that coal. Like,
Oh,
that they have that stuff in the middle of the country in Illinois and stuff, and it's getting shipped all around the world. I think in a similar fashion is probably how so many manufacturers they're making stuff for places they'd never heard of, or
oh,
and it,
yeah, it's unbelievable. It's unbelievable from that perspective. I think, I think just to kind of segue to some of the things that I think we wanted to kind of talk about on the podcast, as far as also, the current state of the banking market and things that, fortunately or unfortunately, we're very closely intertwined with. I think that plays also into the international outfit. I think all of what we're seeing in the banking community and was really exposed in '08 was because of and whenever you want to put a timestamp to it, the explosion of globalization. And we always we often think of it very much from a trade perspective, right? Things are made here and then things are sold there and it sort of moves around. But really, the ultimate act of globalization was centralizing the banking system of the world, essentially, right? And it's not really done, and that's not the textbook definition, because it's not actually centralized, of course, but it is ultimately, right? So we have the central bank on one end, and then we have ultimately the Federal Reserve on the other. And why every other country has a Federal Reserve, but why ours is so meaningful is, of course, because we are the reserve currency, being the U.S. dollar, in the world currently, and have been, for quite a while at this point. So that interaction already inherently is completely intertwined at this point. And then when you develop an entire world economy on those principles, you have what we have today, which is an extremely intertwined banking system all around the world. You have everything from deposits to credit to equities. It's all intertwined in these giant buckets. That being said, of course, for example, I had a conversation with one of our very close regional bank relationships with a bank based out of Houston that lends to customers of the bank across the country, but really only has a footprint, like a banking footprint within Texas. And they couldn't be more comfortable. Their balance sheet looks extremely healthy. They've been doing what they've been doing for 80 years. It was backed by an original family. Still, a lot of the family are part of the original bank, and they couldn't be happier with the environment outside. They lend to the customers. They lend to. If anything, the bank's been getting a much better premium on the rates the last couple of months. The last year and a half already. And for them, it doesn't matter that it's storming outside. They got some really warm shelter inside. So that's very much an anomaly. And I don't think they're heavily exposed to the globalization and everything we were just referring to. Not that being said, of course, to an extent, right? There's always, everyone's exposed to some extent. That being said, even myself, I've done deals with foreign national groups with this bank who they've lent to, but ultimately they've lent to the underlying collaterals of U.S. based property in their neighborhood. So even though there is sort of an international exposure, it's very limited. So I think that's an anomaly. But then when you go into the larger banks that everyone knows, and all the brand names, even now the newest, bank that's very much public, Information Credit Suisse. So that is definitely a Swedish bank, but I personally don't necessarily have accounts there, but I know people who do, and it's a very normal bank to bank in, even if you're a US based person, certainly if you're a US based enterprise or institution. And certainly I've done a lot of lending with Credit Suisse, especially in the CMBS space, and they've at times have different balance sheet products, credit facilities. These are all very common tools and competitive at different stages, in the market. So seeing that transform definitely has direct impact and really shows this how intertwined everything really is.
Let me ask you one thing. You seem to have a lot of faith in America, and I do too. But one of the things that keeps coming up is also, and Ray Dalio speaks about it in The Changing World Order, kind of the change of power. So how strong, given that you're kind of have the finger on this out, do you see the world reserve currency status of the United States?
Wow, you asked the bazillion-dollar question. It's my favorite question. I don't have enough time in this session to go really into it completely, and I'm not going to say it better than, Ray Dalio himself, because the guy is, of course, a genius. And there are a lot of like-minded individuals that, are either more outspoken or less so, but the school of thought is definitely out there now. And I'm an avid reader and digester of that information. I believe the not only the greatest threat, but the ultimate thought of all things that America decides to do in any capacity is attached to maintaining itself as a reserve currency. It's one to one. You could have the strongest military in the world. You can have the best McDonald's. You could have the best product ever. But without that reserve currency, it just won't be the same dynamic, right? It's just as simple as that. It's not discussed because it's such a major topic, in my opinion, and it's very complicated. So it's not something, for someone, who's not well educated in the topic to really even understand how it all sort of works. So from that perspective, assume the basic principle that every decision is based on maintaining that status. So everything you're seeing, although is being explained for all sorts of reasons, inflation, et cetera, and which these definitely are, ultimately all of the decisions being made by the Fed or the White House is absolutely tied to maintaining that status. So, for example, the rising of interest rates is, of course, to ebb inflation. But why do you want to ebb inflation? You only want to ebb inflation because if inflation gets out of control, there is absolutely impossible to maintain it as a reserve currency by definition. No one, people, I think, talking about the international point of view and how it connects to the U.S. point of view, I think that we Americans at times may have a habit of downplaying, I wouldn't go as far to say the intelligence, but sort of the point of view of international eyes on the U.S., right? I think at times we're quite confident that people have a good understanding of our stature and standing, et cetera. But the reality is there's no fooling the international community. They buy into the reserve currency because it's the strongest currency. It's not like anyone's playing a game. It's not a magic show, right? It's because they believe in it and it makes sense. And things like runaway inflation would immediately make them not think that, and that it would be a very quick cycle out. Now, always then the second school of thought is, well, what would replace it? And that's always the next follow-up question. Well, I think, in my opinion, and again, listen to the Ray Dalios, much smarter people, much more experienced than me, but of course, it's a very silly response because, the reserve currency, even though it's been around a while, it's only been, a half of a century, maybe a little more. There's we've been around much longer time in society than that, and there's been many, and you can argue gold, you can argue a different currency that's tied to gold. There's so many other versions. You can maybe argue crypto. I wouldn't know the answer. It's not up for me to figure it out. But the idea that it couldn't be replaced is a silly connotation, of course. So of course it's on the job of the U.S. government to figure out ways to maintain it as such. And I think if once you understand those fundamentals, decision-making by the Fed, decision-making by the Treasury, all of the decision-making will be more clear to people. But again, I said it's harder said than done because you really got to understand really how the reserve currency works, how it came about, how it's maintained, to really understand why decision-making is then dictating those decisions, ultimately. And, what's dictating those decision-making. So I think that's, I hope I answered your question, but it's a very, very loaded question. I would say in some, and definitely in fear of saying too much, I think we're at a very crucial time in history in which this question of the reserve currency could have never been more prevalent. I don't think it's a public conversation as much as it's the conversation being talked about every minute in the White House at any given point in time. I think it's the conversation. And with that, I think we're making two decisions. There's the short-term pain for the long-term gain, which is what Powell's been doing. I'm not going to go into my personal feelings towards Powell. Overall, I think he's doing what he has to do. That's my overall sentiment on it, which is that it's the short-term pain for the long-term gain, which is by raising interest rates at this pace, really shocking the system. It's the best way, no questions asked, to eventually cut inflation by its ugly head. And although it could be, and as we're starting to only really see, in my opinion, only really start to see the pain that sort of environment inflicts in the short term, which is why we've avoided it for so long. But I absolutely believe fundamentally it will help extend the discussion around the reserve currency for decades to come if it's successfully done. If not, it's not a century more. I can't know past that. I won't even be here. So it's only as relevant. But I think for sure, and that's A. But again, the short-term pain, it sounds like an easy phrase, but to live it is not necessarily livable. So that's route one, and that's been the route. I think that was the clear decision about, starting Q1 of 2022, and we've been seeing that decision play out, being adjusted based off things he's seeing, but that's the decision as of yet. I think the other route, Yeah. Oh, I'm
It
sorry.
sounds like you're
That
confident that the patient will take the medicine.
I don't know. I don't know. So far, the patient's starting to kick and scream, so we'll
Yeah.
see. We'll see what happens. The alternative is the patient doesn't take the medicine. So you say, you know what? I don't want to have the headache. Take the lollipop. You can leave the doctor's office. And that will in the short term have tremendous impact in a positive way. It would create this kind of confusing but optimistic sentiment. We would see a kind of a not a false but a very much real uptick in transaction volume, things of that nature. But in my opinion, that would be a terrible historic decision, because that the everything we're talking about from a reserve currency, that would really just be prolonging what would then become inevitable, which it's impossible for it to work out of that, because I think we were at a point of no return already with this inflation, and just in general how the way that we go about the currency and how they print money in the way and how it kind of all works. I think without really putting the brakes on it at this very crucial moment in history, I think that would be an unwise decision. But that's just my opinion. That being said, it doesn't help me personally as much where interest rates or cap rates are so challenging. I think, Hannes, and maybe I don't know how much more time we have, but I think where we're looking to, and everything we're talking about, the practical implications, because I think everyone gets like, oh, freaked out, or oh, you got your conspiracy, da, da, da. It's not. We're just talking very high level financial concepts that I think are not understood, so they seem scary and out, far out. But the practical implications are the following. We are in a time where the reason why it's so hard to make a deal is because the disparity of where the sellers and the buyers are is simply because we went from an environment that people bought based off debt, and we're moving back to an environment where real estate really had always been, where people buy real estate for the real estate, and the debt just makes the deal that much better or that much more safer, or it just is a component of the deal. And when you move from one to the other, there's a tremendous amount of friction that has to go until that works, if you will. So I think we're very much in the midst of that friction, and you're starting to see that play out in real time. We're starting to see, just to make it really simple, we're starting to see 4 cap deals move out to 5 cap deals, maybe move out to mid 5 caps to maybe 6 caps. We're seeing 6 caps move to 7s to 8s, maybe to 9s, and so on and so forth. And again, I think that it's going to continue to take time. It hasn't been overnight, and it won't continue to be overnight. But I think over time, that is how the market plays out in real time. It corrects itself. Everyone uses these words, correction, et cetera. What does that mean? It means that, essentially. And, for all of us, whether it's, wealthy capital, whether it's K finance in the structured finance space, whether it's lenders, sellers, I think that's the environment we all want to be in long term. But it's the pain to get there is painful for everyone involved, and every seller is a buyer. So if you're telling me that cap rates are going to expand, that means fundamentally properties I own could potentially go down in value. And the only argument, and I'll end on this, the only argument I would make to that, and I was saying to my client end of last week, and he appreciated it, which we're getting to not an argument, but a disagreement as far as, but Yair, why I understand you're telling me that outside the market won't look at deals that are not at least 20% repriced from year over year, which is basically overall the consensus, right? 10 to 20%, somewhere in that range. And the experts say for the market to get to levels that are more normalized, it got to get to 40 and up to 50% in some extreme cases, right? So he said, like, why if my NOI is just as healthy, it's not growing, my property is in better shape because I keep putting more money into it or maintaining it equally, fundamentally, there is nothing different for my property from yesterday to tomorrow. Even my debt is fixed, so I even have a fixed cost, associated. Why should I sell my property for less? Why is it worth less? I said, you're 100% right. It's probably not worth less. Maybe it's worth more. But if you want to sell it this year, you will have to sell it for 20% less, right?
Yeah.
Because it's the price of what someone buy it for, right? So I think that is that shift in a very easy example to digest, but that's what's going on, and it takes time, and that's why real estate is a really great space, in my opinion, to park your wealth for so many reasons. Every deal is almost its own business. Your diversification just changes deal by deal, and the only thing that you always need in real estate to be successful is time. If you have time and you buy it at, so you buy, everyone knows you make your money on the buy. That's, of course, that's fundamental. You can't buy stupid. But assuming that you buy pretty well, if you have time, most deals will always make sense. But time is a precious commodity, and we don't always have the time. So I think that's the challenge, So
And sometimes even if you have a good deal, if you don't have time, it turns into a bad deal.
bad deal. That's exactly right. That's exactly right. So yeah, I hope that wasn't all too wordy. But.
No, I think it was actually a great final download on what the space is about right now. So when do you think the transaction volume will shift again?
Yeah, so I think the consensus, and again, everything I'm speaking is just what I'm digesting and kind of regurgitating. But I think assuming the Fed continues their position, which is, we continue this rate increase up until the point, or I should rather say, we're not going to see any relief of interest rates up until the point that we see a significant change in inflation. I mean, clearly it's working to a degree, right? I think you never know these numbers are accurate. I think, they say it was closer to 7% at its highs, maybe it was closer to 8.5%, maybe even 9%, whatever that is, from where the initial indicators were lower. So it is going downwards. So there's a very positive sentiment around this environment, as painful as it is working to a degree. And that's why I'm encouraged that although they did a 25 basis point hike, which I thought maybe they should have just done the 50. They're already there. You might as well just keep pushing ahead. But okay, they did the 25. I think a lot of folks didn't even think they were going to do the 25. All things considering with the current banking environment, et cetera, I understand their decision making. But ultimately, if they continue this sort of trend, which again, Powell's communication has been pretty straightforward, and I think it continues to be. So I think we're going to see more of that. I don't think we'll see the relief comes from two very simple things, Hannes. The first thing is what we were just talking about. The ability we have to see, cap rates come out a little bit, for sure. And that's just a natural way of how things play out. So that's A. And as that happens, the relief and what you're referring to is sort of that more normalization of transaction volume that we all can't really put our finger on, but know when it's happening, kind of thing. That you're going to see with the perfect marriage of that, I wouldn't even say the peak of cap rate, expansion, but, once that starts to build momentum, and then you see some relief from the Fed. And I think all of that will come in somewhere in the mid, 2024. So I think we got a nice run left here of sort of this changing environment. And if it works, which I think it is working and will continue to work, then I think, yes, by early, mid, maybe even end in more extreme cases, we're going to start to see that the repricing really have its full momentum. The Fed will see that, acknowledge it, give just a little relief. At that point, interest rates will be that much more higher, giving the Fed that much more room to bring them back down, right? A lot of the big problem we had is, why did we go down to zero interest rates? Because we kept doing this up, up, down, down, up, up, down, down. Eventually, we just went to down, 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 and then it didn't make any more sense. Not to simplify something very complicated, but that's basically what happened. So I think this gives the Fed back to a place where they can play with the levers a little bit more in a healthier manner that they did for decades. And that's the attempt, and I think they'll get there. I really think so. I think with every, oh my God, scary thing that's been happening. I'm sorry, my charger, I just need to, it's going to die here at the last second. I think everything that's been going on, I think that it does make it a little bit more challenging. That being said, so, I think that's, I lost my train of thought at the end there, but I think that's, I hope that answered your question.
All good. Yeah.
Yeah.
All good. So, Yair, this has been very inspiring, very informative. One of my favorite questions always at the end, what do you consider a life well lived?
I think a life well lived is that you wake up every day excited about what you're doing. I mean, I think we've all been there where you wake up and you just doesn't feel right? And if it doesn't feel that way, you're not living the life you should be living. You gotta wake up and go, oh, it's great to be alive. I'm excited to do whatever that is. Have patience, and the ability to see things all the way through. me and my wife always have a funny discussion around she can't see past, to next hour, and I only can see things in 10 years from now. So that's why we're the perfect balance. But I think there's a lot to be said about patience and vision and seeing that through. And for me, everyone gets their own news, but for me, I get a lot of course, enjoyment for my children and my family of that of course. But I think the consistency of things is something that's lost on I think my generation and certainly the below generations. And it's something that has always been revered in kind of the older generations, right? The person who can really wake up day in and day out, bring that same attitude, that same charisma, that same focus. It is not for the faint-hearted. It's not easy, but those who do it are usually extremely successful, and I think that's a principle I very much live by.
Yeah, I think you're very much right. It's like the consistency. And the other day I read a quote. It's like real estate is the ultimate delayed gratification. It's like
That's it.
if you have that level of patience that you can just like sit there and grow your wealth very steadily, and don't get too fancy. Just stay consistent.
Stay consistent. That's it.
Keep the volume up on the work that you're doing, and it will naturally happen. And it's not something that comes natural these days, because as you said, there's people who have a lot less foresight. And actually my wife is similar. She just ate a meal and then she thinks about, okay, what do we eat next? Kind of thing.
Right.
The hourly
Whatever that
mind
will be,
space.
right.
While I'm always trying to zoom out, and I'm like, okay, let's see how far we can take this line of thought.
No, absolutely. And I think to only so that we have whys after this podcast, I do think that there is a value in sometimes the short-term thinking, and for, let's say, certain whys, or like, let's say my wife who's taking care of kids, and they're, anyone who has kids knows that they're on you any second. You sort of have to have those defense mechanisms. You have to have that skill set. So I think in every situation there's value, but yes, I think generally speaking, especially in our field in real estate investing, it's pretty hysterical to me when I see marketing from groups out there that are literally promoting to get rich in real estate. It's like an oxymoron within the sentence. So, anyone who's listening, if anyone's telling you to get rich in real estate, I'm not saying you can't get lucky and get rich that way, but as an overall strategy, I would be very suspect of that, for sure.
I think especially coming out of what I consider the golden decade, financing.
Oh,
we just came out of the perfect storm. And
absolutely.
Now we're back to fundamentals, and we need real productivity. We cannot just hope on cap rates compressing further.
That's it. Yeah, 100%.
Awesome. Yeah. I enjoyed our conversation so much. Where can people connect with you and K Finance?
Yeah, absolutely. So you can always go to our website, kfinance.com. You'll see our different loan programs, our different equity programs. You can always reach out if you want to talk it out and discuss more about what we can offer on your deal or in general. As far as me, you can find me on LinkedIn. I'm not much of a poster, but certainly reach out and meet more of my team if you do so, and look forward to hearing from you.
Yeah, awesome. And we will add all of that to the show notes. And thank you so much for taking the time and sharing your wealth of knowledge with us.
Hannes, I really, really appreciate it. Thank you so much, and have a fantastic day. Look forward to seeing you soon.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.